This video is just a general strategic overview of the extended manufacturing game. Some general things to think about as you are completing the simulation. This is part of a video series to go along with the supplemental ERPsim SAP Labs and textbook. It presumes you have ERPsim experience. Obviously you would have SAP experience as well. You've completed the manufacturing game once or twice. You've gotten through the production process, Lab 4 if that's been part of your curriculum. And this is really just an overview of the gameplay, just some general strategy. So far within this curriculum, we've done a couple of things. There's the SAP labs, and really the purpose of those labs was to give you experience in SAP. The labs themselves were not strategic in nature. It was really more so understanding how to navigate and knowing that SAP that's not forgiving, it's tedious, there's a lot of different options within each screen. Hopefully at this point you are no longer intimidated by the interface. You have a general idea of how to navigate. That's really the goal with the labs. So it really wasn't a strategic experience. It was really just get more functional. We did the production process as well. So going through how to create your products, starting with the forecast, getting through MRP, all of those things. The information I'm going to cover in this video really ends up not having a whole lot of meaning without consistent production. So again, remember you need to have consistent productivity before you can really talk about some of the more strategic aspects of the manufacturing game. If you did Lab 4 and you struggled through it, you definitely need to learn the production process before really getting into the strategic part. Going forward, it's all about strategy. So you've gotten the SAP part down. You have the production process down. It's how can we then generate more profit? How can we get our company valuation up? Throughout this, you'll see, and it may not be as obvious, but you'll see that ERP is part of the strategy. So ERP is there to pull everything together, and you're going to have a hard time running a profitable company if you don't have ERP in place. So the company valuation ends up being the one and only metric from here on out. It's the measure of your strategy. The biggest piece of the company valuation ends up being your net income. There are other metrics, of course, other pieces of it, but the net income fits right into it, so your profitability. And really this is getting into the strategy. We're talking about everything you learned so far, and I don't just mean within this class, but everything you've ever learned about business, whether it be on the job or within another class, it all comes together here. You're literally running an entire company within a simulated market. So this isn't an IT class, this isn't specific to whatever it might be, supply chain, marketing, everything is coming together within this. The extended manufacturing game, you're running a company, you have to keep up with production, you do not want any stockouts of the actual finished goods you're hoping to sell. There's no such thing as a back order, so if you have a stock out, you're simply not selling. So you have to make good decisions with your assets. This factors into your company valuation. It's in multiple ways, both in how your assets are calculated at the end of the round or the end of the game, but also how your net income has been affected. So how you adjust your assets to increase profitability, that all comes together. You're going to need to adjust your strategy as necessary. You'll find as you're going through the manufacturing game, your strategy the first round or two will end up being a little different than the strategies in rounds 3, 4, 5, 6, however far you go with this. The more you're playing, the more your strategy changes, the more you can do with your assets, etc., etc. So you're going to be adjusting your strategy as you go along. And again, net income factors into the company valuation, the one and only metric. But really, you have to be profitable. There is no such thing as a positive company valuation without net income, a positive net income. If you have negative net income, you are guaranteed negative company valuation. So that factors right in to it. So you have to be profitable. You have to be selling, and you have to keep your expenses down. The advanced manufacturing game is what we'll be doing after the extended game, and it builds on top of the extended game. It's really everything you've done so far, and it adds in a logistics piece of it. So it seems like, oh, that's not much. It's really only one transaction, but it's a lot more complicated. You have regional storage locations, distribution centers, etc., etc. So just realize you need to have the extended game down for the logistics game to really be a simple addition of a transaction. So that's, again, if your class is doing this, you'll be doing the advanced manufacturing game. It adds in a more complicated part of things. So within this curriculum, following the textbook, the first part, again, we have part one of the first part, experiencing SAP, getting in the labs. You may have done the distribution game. Part two is learning and demonstrating the production process, and then getting into the second part of the curriculum, expanding into strategy. It's really how ERP helps you strategically, how you can increase your net income, and then of course that factors into the company valuation. If you're doing the advanced manufacturing game, that's the very last part of the curriculum. And again, that's just, it's based on the extended game, but it's a bit more complicated. It has logistics, and again, the same thing, net income. You have to be profitable. You have to increase your revenues and decrease your expenses. So within that the second part where we're getting into here, profitability matters. You end up being ranked by company valuation. Depending on how your class is set up, this may be how you're graded. You'll need to see the syllabus for that. But how you're ranked is really coming back to your net income. Again, if you have negative net income, you have a negative valuation. The higher the net income you have, the more likely you will have a higher company valuation. Again, there's more factors into it, but net income is the key. So keep this in mind. Moving forward, so if you did the SAP labs, there was no simulation running. You're able to do that really at any time. You may have just done it in a lab or in class. You may have done it outside of class, whatever. Going forward, you have to have the simulation running to be able to practice any of these. During the time that you're practicing the simulation is not enough time for you to really understand everything that's happening. If that's all you're doing is trying to figure it out during the simulation, you're going to run out of time. You really need to be spending time outside of class, looking at the ERPsim, the data, everything in SAP, and figuring out what you could do to increase your net income. The data itself is available generally for a week after the simulation. So if you're completing it on a Tuesday, you should have at least until the following Tuesday to access that data. Check with your instructor to see how much time you do actually have. It may be 3 weeks, maybe 4 weeks, maybe 4 days. But you should have some time after the simulation to be able to log back in and take a look at the data. In the many years of doing this, I've seen a clear difference between the winners and the losers, the companies that have the highest company valuation, the highest net income, and then the lowest. Did they work outside of class? So if you're not spending time outside of the simulation, you're probably not going to do well within the simulation. So running the simulation is the bulk of the next section, but again, it's only going to be limited time for each class. So you'll end up having other time to work through what it is that you did in the simulation. So do plan on spending time outside of class. It's kind of like an additional group project. Talking about the ERPsim Strategies, well, there are so many different options within this, and we're talking about millions and millions of euros worth of assets that can be allocated in different ways. It would be impossible really to cover all the different directions you can go. So there'll be some other videos that'll come after this that get a little more granular, talking about different places to look that maybe you haven't to think about, but there really isn't a way of telling you all the different strategies that are out there. So again, as we're going through all of this, as I'm going through the videos, as you're reading the textbook, don't get caught up in the details. Just make sure you have positive net income and then start looking at the different strategies. The ERPsim Manufacturing Game Participants Guide is also available for you. It has additional transactions, descriptions. Really, it gives a much broader description of just the customers, the market, your company, the processes that you're running through. Make sure you're reading through it. So you may be thinking, well, what if I do this strategy? And you want to know a little bit more about what would happen. The Participants Guide is a good place to look. So read through what's in the Participants Guide. And again, I can't anticipate everything that you'd be doing. I can't make a video for every strategy or combination of strategies. Some general recommendations about strategy. So before the game, you need to make some general decisions with your group. So come up with the products you're going to be selling, producing, the pricing for those, how you're going to manage your assets. Again, in these beginning stages of this, having it perfect, no one's expecting that. try something new. Try something every time you have a practice session. Figure out what works, what doesn't. So that's all the pregame side of things. You'll also, part of that pregame, you'll want to divide roles. And I have it listed here. There's actually maybe 5 different roles that are listed here, but it could be 2 people. It might be 1 person doing this. I hope not. This is a bit much for 1 person. 2 people, yeah, that's doable. 3 people, all right, you cross over a little bit. 4 is plenty. And in my classes, I try to keep it somewhere between 2 and 4 running this, depending on the level of experience. So I recommend dividing some roles. I'll talk about this in another video, how you can actually divide these. But you have somebody who's doing production. You don't want 2 people doing the production process. 1 person who's looking at pricing, maybe inventory. That could be 2 different people depending on how you divide it. Looking at the overall strategy, making sure you're profitable, and also keeping track of which products are available you want to be selling. So again, this is all big overview strategy. I'll talk about some of these things a little bit more in detail in another video. So pre-game planning, you want to have collective agreement on the initial products. Everybody on your team, you all agree how many products you're going to start with, you're going to manufacture, what the initial forecast should be for them, what you're going to do with your assets before the game, if you're going to invest or pay down your loan, whatever you might do. Agree on all of those, and you can complete this before the simulation starts. All of this can be done before round 1, day 1. You can also decide, so talking about the products and the sales forecast, do you want to change the bill of materials, the recipe? There are 12 products available. Which ones will you manufacture, and do you want to change the recipes for them? So you can have any combination of the standard products of all 12. You can have 2 products that you're manufacturing at any given time. You can have all 12. I don't recommend that, but you could have all 12. You can have 6, you can have 3 of the ½ kilogram, 3 of the 1 kilogram, whatever combination you'd like. So again, come up with which products you're going to start with. You can also change your recipe. You may change it for any number of reasons. It might be because you find that the price of one of the components ends up going up. You still want to offer that product, but you don't want as much in your bill of materials. So maybe you're going to lower strawberries as an example in your recipe. Maybe you find that there isn't enough strawberry, or it's one way of differentiating your product from another company if you have more strawberry. So you can change your recipe. An important note is that you can't change if you have inventory in stock. So you want to change the bill of materials before your first MRP run, or before you order anything for that product. Now, I do have an asterisk there. There's some wiggle room on the inventory. You can actually change the bill of materials if you have less than 1,000 of the product in inventory. Presumably, that's so close to 0, you pretty much are nearly 0. But again, if you have 1,001, it will not let you change it. So to change this, you use a custom transaction. This is on the job aid. It's a ZCS02. It's a custom transaction. It starts with a Z. It follows the rules of the MMA, and this is within the participants guide. It's the Muesli Manufacturing Association. There are minimums for the different products that you're going to be selling. The custom transaction is set up to reject a faulty recipe. So if you're trying to change a ½ kilogram box so that you are reducing the number of ingredients so that you only have 400 grams instead of 500 grams, it's going to send it back to you. So again, make sure you look at the job aid, the participant's guide to see the MMA guidelines. Now, if you have SAP experience and you say, I know CS02, do not even think about changing the bill of materials with another transaction code. In order for your product to be sold, you have to follow the MMA, and ZCS02 is the only one that will do that. So you have to change the bill of materials within that transaction code. Even if you can change it somewhere else, what ends up happening is you could change it and then it won't sell it. It'll just be sitting on that inventory. So make sure you only use this transaction code. So you will want to explore changing the bill of materials, maybe not in the very beginning, but as you get into your strategy. So again, this is marketing. If you took a class that followed the 4 Ps, there's the promotion. So you do have advertising you can do, the marketing part of it. the ZADS. You have the price you can change, VK32, the place. You don't have a lot of control over that. You have the different distribution channels, but you can't put up a new store somewhere else. But then the fourth P, if you know the four Ps, is your product. Product is marketing. So if you change your product, you are changing customer demand for your product. So create a better recipe, sell more products. That's entirely up to you, and again, it's something you'll want to explore at some point. Maybe not in the very beginning as you're learning these things, but as you get more competitive, you'll want to change your bill of materials. At least try it. The sales forecast. There's a section in the textbook that covers the sales forecast. It probably will make a lot more sense after you've run the production process a few times with a little bit more experience. I recommend rereading the supplemental text as you gain more experience so that you can go back and say, oh, that makes more sense now. So an item to note is that there is a formula in the text that tells you the starting forecast. It absolutely needs to change. It's a good starting forecast, a good way of testing the market, but there's no such thing as a perfect forecast. There is no such thing as set it and forget it in ERPsim. If you were to leave it at the forecast within the textbook and just keep running MRP, you're not going to do well. So you will need to change it. You may even tweak the forecast based on your experience, but whatever you need to do, just, again, if you start with that forecast from the textbook, you will definitely be changing it. Again, dividing the roles, the production manager, you'll be running MRP, converting the purchase requisitions to purchase orders, and then again, there's that lead time, the waiting for raw materials. So then once you've received the raw materials, you'll convert your planned orders to production orders, and then immediately repeat the process. This is best practices. You've converted your production orders from planned production orders into actual production orders. Go back and run MRP again. So that kind of becomes step one. Convert the planned production orders to actual production orders, run MRP. Convert the purchase requisitions to purchase orders, wait. So find that production rhythm. You don't want to have any stockouts. You want to have just-in-time inventory. So just make sure that you get that process down. There's a strategy in production management. So one, always be producing. This is something I see students do. They say, oh, well, we're having trouble selling. I just won't produce for a while. No, always be producing. So if sales aren't keeping up with your production, that's their problem. They need to figure out how to move the product. Anytime you aren't producing, you are building up your fixed costs, and it ends up costing you money by not producing. Of course, it costs you money not to sell either at the same time, but you can always catch up for that. Maybe the salespeople figure it out, and you sell out the majority of your products within a couple of days. Well, if you weren't producing, now you're out of stock. Now what do you do? So always be producing. Thinking about the strategy within this, think about setup time. So there's built-in between products, the setup time. Even if you were to reduce the setup time, there's still a setup time between products. Do you want to approve a production order for 16,000 products? Because if you do that, then you have whatever you were just producing, you have the time to set up, you produce for 16,000, which then the total capacity, daily capacity is 24,000. So then all of that extra capacity has gone to setup time. You produce the 16,000, then you have another setup time. So if you keep seeing a bunch of orders for 16,000, the minimum for the production orders, let people know. We do not seem to be selling. Maybe the forecast needs to be updated. 16,000 is a fairly low production order to be converting. So you want to have that higher. How much higher is up to you and your group, but just realize that 16,000 is low. You might even say it's 18,000 that you want to go. It might be 24,000, it might be 48,000. So just be aware that a low production order is indicative of slow sales, and you don't want to always convert it. Getting into more with the strategy, which of the production orders do you want to convert? So there is an option for select all for all the production orders and convert, but that's not necessarily strategic. That's just pressing buttons. So you could ask, so which order should I convert first? I have these 3, 4, 5 different products I can convert. Which one do you want? So the person who's kind of watching inventory or the sales might say, we really need blueberry. Can you put blueberry in first? All right, and you select just the blueberry line and convert it. You might have multiple blueberry lines, convert all of those. So again, there's this constant communication. You have that built-in wait time, this is the time to talk. If all you're doing is selecting all and converting, well, if you actually need blueberry and that's the last one that you converted, it might be 5, 6, 7, 8 days before the blueberry comes through. You have a stock out, you're not selling. You're not increasing your profit. So another role, price and inventory manager, follow the sales report. What's selling, where are they selling? So there's two different sides to this. Which product is selling and where is it selling? That factors into your marketing. So if you have the different regions, the north, the west, and the south, if they're buying in one region, maybe you don't market there, or maybe you market even more there. It depends on your strategy. So figuring out what's selling and where it's selling factors into all of this. There's the Z Market report. It's an industry report that is published every 5 simulated days. You can go through that and you can see what is your market share for that product over the 5 days. So yours is going to be included, your sales are going to be included within that Z Market report. We'll take a look at your sales for that same time period and see where you are. If you are selling and they aren't, fantastic. If they're selling and you aren't, why? If they're selling a ton, well, why are they selling? And you can see what the average price is, and maybe the market price is below your cost. Well, you don't want to do anything with that. And along those lines, watching the variable cost, have the raw material prices changed? You don't want to reach a point where your selling price is under cost. So if you notice that on the Z Market report that everyone else is selling below what is your cost, maybe you shouldn't be doing that product. So, or it might be increasing marketing. So this is all part of your strategy. The purchase order report, ZME2N, lists the actual raw material cost per order. So at any given time, you can go back and take a look at how much that the raw materials cost you at that time. But remember, you have to calculate your own unit cost within this. There isn't a clear way of saying exactly what your unit cost is per production order. If you go into the vendor pricing ZME13, it shows the current material prices for each vendor. So it's listed within the viewer. You can also look at it within this transaction code. For pricing inventory manager, remember the distribution channels. Different channels have different marketing. So remember that distribution channel 10 doesn't really respond to advertising. They respond more to price. Distribution channel 14 responds more to advertising. So thinking through where it is you're selling and which products sell in each one of those distribution channels, it's going to factor into your strategy. So you may change your strategy based on the channel that you're working with. Watch the sales reports and the marketing reports. Is there a trend in a certain area, a trend within a certain channel? So you'll actually see the distribution channel that it's sold in. You'll see the region where it's sold in. You can also take a look at this report and see how you compare to the industry average for price. So all these different sales reports come together, and it should be part of your strategy, should guide your strategy. Demand per product is randomly set at the beginning of each simulation. So there are 12 different products that are out there. There are different product demands for all 12 products every time the simulation is run. Once that is set, it does not change. So the entire game, that's going to be the demand. So the price and the marketing doesn't change the amount of demand. It's taking the sales away from someone else. So if you change your price, that doesn't mean the demand has changed if you're selling more. It means you have taken someone else's sale. So this is kind of just an overview of if you have, let's say the total demand within the simulation is 1, and you have a percentage for each one of these. So the half kilogram has a set of demands, and the 1 kilogram has a set of demands. An important thing to note is there's no such thing as, well, everybody likes strawberry. They'll like the half kilogram strawberry. They'll like the 1 kilogram strawberry. Now this, and these are made up numbers, and it's not even entirely accurate for how this works, but just showing you that the half kilogram strawberry is a different product than the 1 kilogram strawberry. Just because they like the half kilogram strawberry or the 1 kilogram strawberry doesn't mean they'll like the other. So one of the reasons why this is actually not accurate is it's actually more complicated than this. Remember, there are 3 different regions. Each region has their own demand for each one of the 12 products. So there's a bit more that comes together. So for each one of these, this is actually a composite of 3 different demands. So you may actually find that something like, here, this is an easy one, the mixed, it's equal. So in the north, the south, the west, it's 0.01, 0.01, 0.01, 1% for each. It may be for something like the original 1 kilogram, it might be 5% in the north and 0.5% in the west and 0.5% in the south. So again, it's going to be divided up regionally. And this is the kind of thing you're going to try to figure out. It would be good for you as a strategy to figure out every single game what the demand ends up being. And you can use the Z market report, your sales report, to figure out what these are. And this is how you would guide yourself, guide your strategy in finding the right product. So something like, if this were the actual demands, 1 kilogram strawberry, probably a good product to be in. The 0.5 kilogram mixed, probably a good product to be in. At the same time, if everybody's finding this out, maybe the 0.5 kilogram originals is a good place to be, because you would then get 100% of the demand for that product, and everyone else is trying to fight for the mixed and the strawberry, as examples. So again, this is something you want to try to figure out. There is not an intuitive place to just press a button and get it. Within the simulation, this is something you're going to have to calculate. This is also an example, a perfect example of the kind of thing you want to work on outside of class. Log back in and try to figure this out so that the next time you've already figured out the logic and you can figure it out in the game. So again, work outside of class on these kinds of things. The inventory strategy manager, try to spot demand trends. Again, it's set per game. There are 12 total products and each team generates demand per day. So the market expands with more teams playing. As it is expanding, that means there's more demand. It's the same, if 1 is demand, it still is the same percentage, but then the demand itself is bigger. So there's enough for all the teams. The simulation, again, it doesn't mean that each team will sell a certain amount. There's more demand out there, but you still have to compete to get it. So figure out what's selling, where is it selling. Remember again from that previous screen that the 1 kilogram product versus the 0.5 kilogram product, they are different. Even if they have the same general label, they're both strawberry. It does not mean that everyone will love all sizes of strawberry out there. So the system does see them as 2 different products, so you can't be thinking something like, but they're both blueberry, they're both strawberry, they're both nut. There's demand for 1 kilogram, there's demand for 0.5 kilogram, it doesn't matter what's in it. Strategy product manager, consider strategies for winning. How can you remanage your assets? How can you invest in your company to increase your net income and ultimately your company valuation? In addition, watch your overall costs. There is a transaction ZCK11. It lists your fixed costs and you can compare that to your current prices. So it has a general estimate for what your total cost is per product. You can then compare that to VK32 where your actual prices are. So within this, it does list the fixed costs. It shows how you spread them out, your fixed asset allocation, or the number for your productivity. But realize the fixed cost within the ERPsim manufacturing game, the loan interest is considered fixed. While we know that is, from an accounting perspective, it is variable, a variable expense, but it's lumped into the fixed cost here. So the variable cost, in addition to your raw materials that you're purchasing, which you should be watching those prices as well, you also have the potential for having warehouse capacity cost, it's a daily expense, and marketing. Both of these expenses, there's no fanfare, there's nothing that pops up and says, hey, guess what, you're now paying for warehouse capacity. You have to watch for these things. If the person doing marketing accidentally puts an extra couple of zeros and clicks save, you are paying that expense and there's nothing will pop up and say, by the way, you now have a big expense coming through. Are you sure that's what you meant? So again, find a role for everyone. This is too much for one person. So if you have just 2 people in your group, 2 people shouldn't be running the same process. 2 people shouldn't be doing the same thing. If you have 3, again, spread it out. So one person's doing one piece, another person's doing another, but don't cross over in the same area. And it may be something like changing the price and changing the marketing go hand in hand, but it makes more sense for that to be separated. Sure. But especially the production process. You don't want two people doing that. You don't want one person running MRP, another person converting purchase requisitions, another person watching the purchase order tracking. Just get that down to one person. At the same time, make sure you're cross-training. Know what each other are doing. So if for some reason it comes down to the exam and your person who runs production is out sick, you need to learn how. You need to jump in and take over their role. So again, know what everyone else is doing, understand the strategy that your company has come up with. Some strategies, again, there's no such thing as set it and forget it. You will always need to adjust your sales forecast. The starting forecast for however many products you start with should never be your ending forecast. So again, you'll always be changing this. You'll be adjusting your strategy from round 1 to round 2 to round 3 to round 4, however many rounds you're playing, you'll be adjusting your strategies throughout. Watch your net income. This is an ERP system. You have access to your net income in real time. So there's F.01, which is the full financial statements, and there's a quick ZF01 that gives you just some of the basics. And net income is included within that. When doing F.01, remember ALV tree control. I think it's easier to review the financials with as you're going through. If you're losing income, if you are not profitable, figure out why. So it may be that you're selling under cost. It may be that you have too much marketing. It might be that your productivity is down. You might have too much inventory, which is twofold. You are paying warehouse capacity expenses, and you're not selling. So you need to get your revenue up to make sure that you are moving your products so you're not paying the expense to actually have them in the warehouse. So again, the strategies, we shouldn't be jumping in too far with the strategies if you're not at a point where you're getting consistent net income. Consider production upgrades. There are a couple of different options for that. How will you do it? Do you try to get a bigger loan? Do you pay as you go? Confirming your return on investment. You should always be figuring out that what it is that you've put your assets into is actually giving you some sort of a payback. So how are you going to confirm that? What kind of an impact are you expecting? Did you meet it? If it's above, below, why? What can you do to change that? Consider product planning. There are 12 total products. If there is a product you cannot sell, stop selling it. If there's a product you can't keep on the shelves no matter how high you mark the price, increase the forecast. So remember that. You don't have to do all 12 products. I recommend you don't do more than 6 starting out. You might do 2, you might do 10 in the long run, but start with about 6, any 6, and just kind of test the market out and then adjust as necessary. Analyze the data. Again, look at this data outside of class. Try to figure out how you can predict what's happening, and then you can do that within the simulation the next time you're running it. Watch the regional reports. So it's really going to factor into the advanced game if you end up playing that. It fits into the logistics, but it also makes a difference for the marketing aspect of things if you're doing marketing. Please use external tools. Use anything you'd like. Excel is a natural fit. There's Minitab, whatever you want to use. Analyze the data, make predictions, and get a handle on your cost. There are a number of different things that you can come up with as you're analyzing the data. Again, we don't know what will happen with this. The simulation has so many options. There are literally millions of euro worth of strategies out there. You're still fairly unfamiliar with SAP. You can, it could explode. I haven't seen this happen unless you're using transactions that are outside of the job aid or what we've talked about. So I'm not worried about it literally exploding, but you could make a mistake somewhere. One of the items that I noted within the production process, if you don't press enter before you click save, you might have a 0, a comma in the wrong spot. Once you put that in place, once you click save, it's done, and there's not a whole lot you can do to change it. So again, things could happen, not really exploding, but sort of exploding. Things go wrong. So another side of this, you may pioneer a new strategy, If you're pioneering a new strategy, there's not a whole lot I can do to help. We can't participate everywhere you go with this. So the participant's guide, these videos, the textbook, your instructor, whoever, we may not know what it is that what will happen if you go a certain direction. So keep that in mind. Again, moving forward, net income, it definitely matters as you're practicing the production process. Net income didn't really matter. The company valuation didn't really matter. But really, you need to have your net income consistent before you jump into some heavy strategies. So if you have negative net income, do not consider any strategies. Figure out why you're failing. It may be something like price on the sales side that ends up being a bit more strategic, but don't jump into something else like paying down the loan or increasing capacity or reducing setup time. Try to get your net income consistent without those things and then start working on the strategies. The strategies are really there for competitiveness, not for profitability. You should be able to be profitable without having any of the major strategies in place. Make sure that you have the manufacturing game job aid. Keep it handy. I've seen students try to use the PDF before, but there's a lot on your screen. You have multiple SAP windows open and a PDF you're referring to, so print it out, have it nearby. It's an overview of the game. If you need more information, there are other places to look, like the participant's guide. If you're not sure how to run an SAP transaction, the job aid itself gives you instructions, some very basic instructions for getting through the transaction. They tend to be helpful once you've done it a few times, and it's just a reminder. But it's not always intuitive if it's the first time or the first couple of times you're using it. So these videos that are part of this curriculum demonstrate the production process transactions. There are a number, probably half the job aid ends up being on those. The SAP labs, the first part of the textbook, have some step-by-step instructions. FB50 is in SAP Lab 3 towards the end. That transaction code is what you use for loan repayment, setup time reduction, which is actually part of Lab 3, and increasing the capacity. So if you need to see how to do that one, you can look at the labs. And the participant's guide also describes most of the transactions as well, specifically how they react to the manufacturing game. And I say that because, remember, you are using standard SAP. Except for the Z transactions that are customized for the simulation, all of the other ones are standard SAP transactions. So Google it. YouTube it. Do all the things you usually do when you're trying to figure things out and you can't find the answer. If it's a standard SAP transaction, it's out there. I promise you it's out there. So you can always find a resource for it, even if it's in the middle of the game. Just be aware of the different places where you can find some of the answers you're looking for. So the next time you run the ERPsim simulation, for the first few rounds, maybe the first round, maybe the first 10 days, work on running MRP, doing your production process, converting your production. You want to reach just in time for your inventory so that you're receiving your raw materials just as you need them. So a steady flow of production, watch your prices. Remember that flawed best practices is a flawed strategy. So make sure you're following best practices. And then once you get that kind of figured out, then start thinking about strategy.